Oh boy, here we go again. According to some right here, Tesla will be at over $3,000 per share, Palantir will be over $500 per share, and even SoFi might be at over $300 per share much sooner than we all think. Yes, these are great companies, I agree completely, who I absolutely think will be huge in the future, but are these prices even realistic at all? Well, the truth is, guys, there are some uncomfortable truths with all this that you need to hear. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. And unfortunately, it's going to be hard for some of you guys to hear out there. So I'm going to discuss each one of the stocks individually. And yes, the uncomfortable truth about all of this is coming as well. So even if you don't agree with me on the individual stocks, it's critical to you in the last part to hear that warning, as it's critical to your success in investing. Now, to be clear and upfront with all of you guys, I own all three companies and I have no plans to sell any of them. I am actually bullish on all three companies, and I would love for all this to be true and to actually happen. But I personally don't live in fantasy land that some folks want to live in the past few years, which has just gotten us as retail investors wrecked over and over and over again, living in that fantasy land. I don't invest in hype, I invest in fundamentals. And that doesn't make me a bear or a non-believer, it just makes me a prudent investor. Now, I personally have a full position plus bonus shares of bonus shares in all three of these stocks, and I can guarantee you, most likely, I'm going to buy more shares in the future of these companies. All right, so let's get down to the truth, and we're going to start with SoFi first. SoFi going to $300. Putting all of the SoFi drama in the retail community, which I address with my group with those videos that are not for public consumption at all, but kind of putting that all away for a second. I love SoFi, but I just don't see SoFi sniffing $300 from here unless we're talking about a decade plus down the road. And even then, that's highly unlikely for this stock. As they move further and further into banking, and as all the barriers, and really just as they grow in general and all the different barriers that it brings, and obviously as your growth rates accelerate and then start to slow down, the multiple is also going to come down as well. And keep in mind, guys, they're basically newly profitable, and we have no idea what multiple Wall Street will land on for them. That is key to the entire bull thesis, and we don't have an answer to that. Now, if you're just asking me for my opinion, I personally believe they're going to get a hybrid multiple of some sort. So somewhere in between a bank and a fintech multiple, which is very reasonable in my opinion to have. But I can give it a full fintech multiple, and it's still going to be very hard to hit that number in 10 years from now, much less 3 years from now, like some are out there predicting. So I personally love the company. I've made a ton of money already on this stock, and I will make a lot of money in the future on this stock. But the numbers being thrown out there before the temper tantrum breakdown some had over the dilution was simply pure speculation and to be completely ignored. But the question is, are you ready to take your investing seriously? And do you want to know how to see value like Palantir at 6, SoFi at 4, Tesla at 100, or even stocks like JP Morgan at $100, for example, with it approaching $300, and avoid all the to-the-moon trash that is currently out there that's going to get you destroyed? If that's you, make sure you take advantage of the earnings sale that ends soon. We'll talk more about it at the end, but it's the pinned comment down there for those interested in finding those type of deals. So next up, let's cover Tesla, since it's obviously different. And of course, the uncomfortable truth about all this applies perfectly there too. And we'll get to that, plus Palantir as well. Tesla to 3,000. To be very, very clear, speculators are right every once in a while, just like a dead clock is right twice a day, which is actually a better track record than the speculators have been for Tesla. Basically, just because someone wins the lottery doesn't make playing the lottery a good investing strategy. So simply because somebody made a speculative prediction in 2018 and it came true, doesn't mean their next speculative prediction will be right as well. And as we have seen with Tesla, they have all been remarkably wrong since those initial predictions back in 2018 and 2019 or so. All the 2021 predictions were all way wrong for 2025. The same exact thing for 2023 from those same folks who were right in 2018, but with terribly in 2021 and again in 2023, so I suspect the latest ones will fall short as well. Basically, all those people making crazy predictions are basically like looking at a baseball player who hits a home run on his first at bat and then strikes out the next 10 times batting, but yet some people still think they are more likely to hit a home run every time because of that one time at the beginning, right? That's kind of what I hear, and that's kind of the arguments that people are making. Tesla is the ultimate example of speculation, and once again, it will bite retail investors if they don't stay grounded in the fundamentals. You can say, and I understand, but you can say, I don't understand FSD or Optimus the same way you do. But what I do understand intimately is stock investing and how the market responds to everything, how a business actually makes money from products, and again, how much Wall Street is going to be willing to pay for that money made, which is what matters the most. And I have been remarkably right about Tesla the past 5 years. I said don't buy in 2021 when Tesla to the moon, right? Why exactly did I say that? Well, it's because speculation like FSD is next year, Cybertruck will be the best-selling truck in 2 years, every car will be a Tesla by 2030 all across the world, every new roof is going to be a Tesla roof. None of that was rooted in reality and utterly useless to your investing and comically false and easy to see it was silly from a mile away. And then on top of that, you add in a ridiculous valuation, and it was actually very easy to see that Tesla wasn't a buy in 2021. Not even close. So looking at that, how did those predictions from all of those experts everyone keeps telling me about today, how did all their predictions go from that time back then? Well, guess what? We're still waiting on FSD, right? I mean, it's next year, right? Who knows? Cybertruck took over 3 years just to start selling, and unfortunately, it was a flop. And Tesla only makes up about 4% of the total US car market, much less the entire world, and Tesla Solar is basically shut down now. Every single prediction was way off by the Ultra Bulls. Not even close, not even in the realm of reason. So why am I a hater or against Tesla because I don't believe the Ultra Bulls now today? Didn't 2021 and 2023 prove them to be incredibly unreliable and harmful to your investing? Why the heck would anyone believe what they say is more likely to happen given that terrible track record? And I'm sorry, but I can 100% believe in Tesla, believe in what they're doing, and completely understand the opportunity with FSD, Robotaxi, Optimus, and energy, while simultaneously believing it is years into the future, and then utilizing a strategy that is not based on speculation, but solid investing fundamentals to make a lot of money in the stock, which is exactly what I've done. I have no clue why people get upset or think I have no idea or should own Tesla, because I consistently, for 5 years now, have avoided the hype, and instead of bought low price shares, I have not sold a single share in panic or fear or anything else, and I simply get to enjoy the run-ups where I make a ton of money. That is literally the point in investing, is to buy a great company at a bargain price so you can make more money instead of buying high and going nowhere for 4 years like some folks did in 2021, following speculation instead of fundamentals. It makes zero sense to buy based on speculation when you get great opportunities to buy great valuations and great companies all the time based on the fundamentals. I didn't have to speculate one time, not once did I have to speculate to buy probably 50 plus batches of shares in Tesla over the past 5 years. Not one time did I speculate in order to get that. Not one time did I use crazy projections or anything else in order to buy that stock. But sadly, many people believe that you need to speculate in order to be a good owner of a stock, and especially with Tesla stock. That's what people think, and that's what's going to get you destroyed as an investor. Unfortunately, it's just sadly not true. Palantir to 500. All right, because Palantir is on an all-time epic run, this one is a little bit trickier to discuss. When you are the hot play in a speculative market and AI is all the rage, and you are at the forefront of AI, and you are absolutely crushing it as a business, on earnings, on those fundamentals that matter, you will quickly outpace your incredible fundamentals, which is what has happened to Palantir. Now, let me be very clear. Just simply because I say something is overvalued doesn't mean it's not a buy or that you should stop your DCA. As a matter of fact, I've actually said the exact opposite on multiple occasions about Palantir. I am also very careful not to put price predictions out there like some folks like to say I do. I just simply give you guys the price I would like to add more shares, which is going to be different than you and different for each one of us out there, depending upon your strategy, the number of shares you want, your plan, your risk tolerance, your timelines, your everything involved in all that sort of stuff. It's all going to be different. And therefore, that price is going to be different for each one of us. The bottom line is, ultimately, Wall Street will give them a more reasonable multiple once the AI hype dies. I know that for sure. Right now, it's sitting at a forward multiple of around 300 or so, which I don't believe they will get long term. That type of multiple has never been sustained before in the history of the stock market, despite all the hype birds saying this time it's different and the market always pays that for great companies. It's simply not true. Although I do believe a premium is warranted for Palantir, no doubt about it, but even the stock with probably one of the highest average multiples ever, Amazon, doesn't have an average a third of the size of Palantir's. So I believe a future multiple 60 to 80 or so is very reasonable in the future if they continue to grow at that 30+% growth rate. Now we're talking years into the future here, guys. I understand they're up over 40 right now. That's not sustainable over the long run. And when you do the math on that, it makes it much harder to hit that $500 price, even over a longer time horizon, much less in the short time frame that some are out there predicting it's going to hit. I'm sorry, but Wall Street hardly ever pays multiples as high as it is right now for years into the future. So banking on that, to me, is not prudent as an investor. Now, to be upfront, I got tons of shares. Great if it happens. I make a ton of money, but it's not the most likely scenario in that short of a time frame. They will either fall down and come back to a more reasonable valuation, or the great earnings will catch up to the stock price as the stock price starts to stagnate in the future. Now, is $500 possible over a longer time horizon? Well, unlike the others that we've discussed so far, I do believe that Palantir has a great chance of getting there and having that market cap. But that is just pure speculation on my part, which you guys know I don't like to do. Nobody can predict that far out, but that is the type of business, and I know that for a fact, that this is the type of business, Palantir's type of business, and it's a unique enough product that it has a good chance of achieving that over the long run if they continue to execute. I'm incredibly bullish on this company, but we have a lot of earnings growth already priced in. I think even the bulls are willing to admit that. Even the ultra bulls are willing to admit that. The good news is they have unlimited demand and can scale quickly, which helps out a ton, but probably not as much in that short of a time frame to hit that price that quickly. You want to stretch the time out a little bit? It becomes feasible, I guess. However, I have to be honest and say that is not the most likely scenario, and that is pure speculation at this point. So that is not even on my radar. It does not even come into my calculations at all whatsoever. And that leads me perfectly into the uncomfortable truth about all this that you must understand if you want to not get caught up in hype runs once again in the future. Trust me, guys, the 2021 hype run seems obvious in hindsight, but during it, it is incredibly hard to see, and many failed to see it, and is starting to feel like that's happening all over again. But the good news is this uncomfortable truth about investing has proven true over and over and over again through the history of the stock market. This is really hard to hear, but I'm just trying to help you guys out. So here we go. You can make predictions out to next year with a reasonable degree of accuracy in regards to earnings and everything else of that nature. 2 years out, it gets a little bit shoddy, really hard to do. 3 years out is just basically guessing at that stage. It's super murky. 5 or 10 years, or people talking about 2030 or 2040, is utterly useless speculation. It is literally the worst thing to use to look at an investment decision today. Tesla is a great example to illustrate and prove this point and show you exactly why these models that go out 5 or 10 years are pure speculation and how flawed all of this speculation is. Now, back when Tesla was 400 in 2021, how many people who were bullish on Tesla, who modeled out on their little pretty spreadsheets and little charts and graphs and all that sort of stuff, Tesla to $100 just over a year later? How many had it trading lower today than back in 2021? How many of their models showed that? Nobody is my guess, because I went back and I looked, and all that I found were projections that had Tesla at $1,000, $2,000, $3,000 per share, and some higher than that. And yes, I adjusted that for the stock splits. That's what Tesla should be at today based upon all those models and everything else. How were they so wrong? How were they just so far off? Well, Here's why modeling out that far is useless for any stock, not just Tesla, for any stock, because you cannot model out human behavior and all the manipulation that goes on with all kinds of things that are out there, right? To include the Fed, to include government intervention, to include all kinds of other things of that nature. You can't model any of that sort of stuff out. You can't model out almost 10% inflation coming in your model. You cannot model out the fastest Fed rate raise in the history of the world. You cannot model out Elon's Twitter activity or him deciding to buy Twitter or him diving into politics. You can't model that out. You can't model out the Cybertruck being harder than expected and taking years more to roll out than it was. You cannot model out geopolitical events, all the different things and all the different chaos that's happened over the past few years out there in the world. You cannot model that stuff out. You can't model out any of the variables that happen every single year to lots of different stocks, in some cases the entire economies and everything else, that make models useless when you speculate out 5 or 10 years or more into the future. Don't base your investing decisions on those speculative numbers. Base your investing decisions on solid fundamentals like valuation. And if it's undervalued, you buy. And if it's overvalued, you don't if that's part of your plan, or you simply DCA right on your schedule like you always have. It honestly is that simple. That is why fundamentals always win over the long run, and the speculators eventually end up losing over that same long run. They are speculating, we are investing. And when you're investing, sometimes you look stupid in the short term, but you almost always end up looking genius over the long run. And it's the exact opposite for all the speculators. They look genius in the short run, and they end up looking incredibly dumb over the long run. Now, let me be very clear. I want all these companies to succeed to those levels. I will see my wealth grow to stupid levels if they do. But there is no need to speculate based on this. And there's no need to base current decisions on my models, spreadsheets, and assumptions that are pure guesses, because they lead you to ignore fundamentals, like you end up buying a stock with a PE over 1,000 because, well, I don't know, you just ignored fundamentals and went with the models and everything else. They're fun, and maybe they're a cool what-if game to play with your stocks if you want to. I don't really do that, but hey, whatever. Everybody likes different stuff. But the only way to avoid trouble and buy when it makes sense is to stick to your fundamentals and avoid speculating beyond what you can reasonably guess at, which is the numbers for the next year, maybe 2 years at the max. That's it. That's all you can do, guys. I'm sorry. I wish it was greater than that, or you could see farther in the future, but we'd have trillionaire investors if you could, and you can't. So that is the reality that you got to deal with right here. And remember, if you want to learn how to do those fundamentals, identify great stocks at incredible prices, and avoid hype and have a group there supporting you, helping you with that FOMO and everything else, make sure you check out the pinned comment. Take advantage of the earnings sale that's going on right now, where you get direct access to me, you get free coaching, free courses, you get, like I said, direct access to our members there that are helping out everybody all day long become better investors. Check it out as the pinned comment. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.